Welcome back. You're still tuned into Markets at Lunch right here on ET Now. And as promised, let's put the spotlight on Imagica Entertainment. This company reported its numbers where revenues have seen a marginal decline of about 2% on a year-on-year basis. And EBITDA too has seen a sharp contraction of about 25%. So what led to this and what's the outlook for FY27? To understand this in greater detail, we are now joined by the Managing Director of Imagica, Jai Malpani, who is now joining us. Mr. Malpani, afternoon. Thank you so much for joining us here on ET Now. Ashesha this side. First up, if you can take us through your assessment of how the fourth quarter was. Revenues have seen a marginal decline. What led to that?
Thank you so much for having me. So the revenues have seen slight decline because our ratio of groups, which is specifically school students, have increased, which is a lower ticket size for us, because of which the revenues have declined. And along with that, our indoor park is yet to ramp up completely. So in the next coming this financial year, we'll see a bigger ramp up of the indoor park happening, because of which footfalls as well as revenue will grow quite well in this coming financial year.
If you can put some number to this, Mr. Malpani, I understand that you're saying growth, but how much growth should investors expect?
So we usually don't give out the future growth outlook for this financial year, but looking at the current year we just passed by, which was FY26, we have had a significant impact in quarter one because of the early onset of monsoon as well as the war situation. But this financial year is looking much better in terms of the heat, which is already out there. So we see a good benefit of that coming to the parks, as well as we have added Shanku Water Park, which is in Ahmedabad, from this financial year. So we have taken over operation and maintenance of that park, and we are investing 100 odd crores in the form of debt and equity into that park. So we see a good growth coming in from that park as well.
Okay, and EBITDA margins too have contracted to about 33%. What will the target EBITDA margin profile be for FY27 and 28?
So we are targeting somewhere between 40 to 45 odd percent EBITDA margins. For the newer parks, it's slightly on the lower end because the cost of marketing and stuff is slightly on the higher side for the park to be marketed well. But at a consolidated level, we are looking at 40 to 45 odd percent margin target for this year as well as the coming year.
So that's as far as the margin guidance is concerned. But Mr. Malpani, I believe the government incentives for your Khopoli Park has now been withdrawn with effect from the first of quarter FY26. What kind of impact will this have on your revenue and profitability going forward?
So that we are still talking to the government, and we are hopeful that we get an extension from it. But we'll have an impact of around 4 to 5 odd crores because of that. At the same time, with that said, our incentive for indoor is in the last stages of approval. So when that is approved, that is we get an income of around 8 to 9 odd crores every year, accumulated to around 38 odd crores. So that is something in the next 4 years. So that is something which is a positive for us in this coming financial year.
Understood. We'll talk about your new plants and new parks in just a bit. But before that, Mr. Malpani, since you were talking about how new students are visiting your park and the average ticket size for them is on the lower side. So any steps that are being taken by the company to increase the average revenue per user?
So in terms of average revenue per user, we are focusing more on the non-ticket bit because we have added a lot of capacity in the last 2 years at all our parks. So our first target is to grow the footfalls and grow the non-ticketing revenue. So in terms of F&B as well as retail and merchandise, we are planning on increasing those rates in single digits, and because of which we'll see a good amount of increase in the non-ticketing revenue bit this financial year.
Mr. Malpani, we are in the thick of the summer season and in the thick of vacation season and summer heat that we are seeing right now. How are demand trends shaping up across all your parks?
So we are seeing a good demand this quarter. It's usually the peak quarter for us, and the first 15 to 20 days have been good compared to last year. And we see a good quarter happening considering all the weather and external factors stays intact. We'll see a good quarter this summer.
You have about 8 parks in your portfolio right now, including the Ahmedabad one that you just spoke about. Any other expansion plans lined up for the next 3 to 4 years?
So we have signed up with the Sabarmati in Ahmedabad on the Sabarmati Riverfront. We have signed up an 11-acre or property with the government. It's a PPP model. So it's in the last stages of approvals right now, and we should get it within the next 1 to 2 months. So once that approval is done, we'll start with that project. Along with that, we are looking and talking to various different state governments for taking land on lease and building up projects over there. So active discussions are happening across Delhi, NCR, Bangalore, Hyderabad, these locations. So we are positive that something fruitful will come out of it. And we are also investing into indoor entertainment. So we have tied up with this concept called Hello Park, which is specifically focused on kids. So that is something which we are launching in Hyderabad just before Diwali this year. So that is another part of expansion we are aggressively targeting.
And what will the capex be for all this expansion?
So for Sabarmati Riverfront, we are targeting around 130 odd crores kind of an investment into that project. And in terms of Hello Park, that is a smaller format inside the city format store. So that is around 9 to 10,000 square feet store where we are targeting an investment of 8 to 10 odd crores in the first one.
How will it be funded? Will it be via internal accruals?
It will be via internal accruals and a little bit of debt which will be coming through for the Sabarmati project. But other than that, everything will be funded through internal accruals only.
Okay, so largely via internal accruals and a little bit of debt is what you will be taking for this expansion plan. Mr. Malpani, thank you so much for taking your time out and joining us here on ET Now and sharing your thoughts on what the outlook for the company looks like for FY27. Thanks so much for joining us today.
Thank you.
And that's all the time we have on this edition of the show. Thanks so much for tuning in. More news and updates will continue on the other side.